RSI, Relative Strength Index. Many people like to use RSI, including me, which is a great indicator based on volatility to identify if the current market is overbought or oversold. But RSI has some drawbacks you might didn't notice. For example, in this chart the price stays in the upward trend, but RSI keeps bouncing between the overbought and middle line, which is hard to identify the trend. So, is there a trend indicator that can blend volatility and trend identification to make better predictions? Yes, this is exactly the indicator we are talking about. Let me introduce the Relative Trend Index. We can find this indicator on TradingView Indicators window and search for the Relative Trend Index made by Zeyerman. This indicator can measure market trends, straight and directions, which is also designed to adapt to market volatility, to minimize the effect of minor and short-term fluctuations. We can also customize the trend length and trend sensitivity. Trend length determines how long the price data will be involved in the indicator calculation. If we want to identify the long-term trend, we can use longer trend length. And if we want to identify the short-term trend, we can use short trend length. Trend sensitivity means the threshold of the significant trend. High sensitivity level means the fewer price movements at the significant, and it also means less sensitivity to price. Low sensitivity level means the price movement is significant and also means being more sensitive to price. RSI slowly focuses on speed and change of the price movement, leading to the potential false signals during extended trend periods. RTI incorporates the relative positioning of the current closing price within its recent range, which offers a broader perspective on market conditions. So, how to use RTI to make profit? The strategy based on RTI is pretty simple. When RTI crosses over its moving average and also in the overbought zone, it's a buy signal. And when RTI crosses under its moving average and also in the oversold zone, it's a sell signal. So let me introduce the next two indicators. To do confirmation, we can search in the indicators window for market bias, which is made by Professor X. After we add to the chart, we need to disable hike and smoothness and then adjust the smoothing to 10. The second indicator is a volume, which is made by TradingView. After we add the chart, we need to enable the volume moving average. Market bias is used to do trend confirmation and pullback confirmation, and volume indicator is used to do volume confirmation. Let's see the short example. First, we need to make sure the RTI crosses under the moving average, and RTI also needs to be in the oversold zone. Second, we need the market bias trend ribbon to be dark, which means the price is currently pulling back and we sell at this point. It means we can enter our trade at a discount price. Finally, we need to make sure that volume is red and also above the moving average, which means there is enough sell momentum to keep lowering the price. This is just one of the many strategies you can do with RTI indicator. You can also add price action, smart money concepts, and support and resistance into it to create your own strategies. If you have any questions about this strategy, let me know in the comment section. And don't forget that you can find fresh market daily analysis in our Telegram channels. Links we dropped below in the description. Bye.